So we're going to go over to the Nadex platform and take a look and see where these, because normally we do the volatility trade on a Wednesday, but we'll see how these babies line up at 2 o'clock.
So let's jump over to Nadex. I wanted to take a look at some of the oil trades that are going on over here. So at 2 o'clock today, you have President Trump. He's going to talk about whether he is going to back out of the Iran deal, right? Now, it's scheduled for 2 p.m. Eastern time today. Now, one of the variables you're going to be dealing with is that's not like an EIA number that's going to come out at exactly 10:30 that you can rely on it.
Right.
A press conference is scheduled. The announcement was scheduled for 2. That could begin at 2:15. It could begin at 3 o'clock, right?
Right.
It could begin at 2 o'clock, and nothing could be said substantially relevant until 2:30, right? I mean, just in terms of who's speaking, who's introducing.
Right.
Everybody needs to be seated. The cameras need to be ready. But let's take a look, because in all likelihood, we will get some news prior to 2:30, with it being 2 o'clock. But that's just one of the variables of many you're dealing with. So let me just close out some of these screens. We'll pull up our oil contract specifically. We'll get it nice and clean for everybody. So here's your oil contract. We're looking at the June contract, currently trading 69.87.
And you've already had a lot of movement, which is pretty cool.
Yeah, up and down. I mean, it's surprising that we're below where we were yesterday with this news coming. You know, I just thought, you know, to have that slide overnight, yesterday at about 3 o'clock, we slid from about $70.80 all the way down to pretty remarkable, under 69.60. You're talking about a $1.20 move yesterday afternoon. And so right now we're sitting just under $70. So Nadex has a variety of spreads, right? They have ones that are going to expire at 11. They have ones that are going to expire at 12. There's going to be another ones put on the board that go from 11 until 1.
Okay.
But what we want to look at are the daily ones that go till 2:30.
Right.
Okay? And so we're going to start off with the daily ones that are introduced at 8 a.m. Now, these are $3 spreads, okay? Now, these dailies that are introduced last night are $5 spreads. So I just want to kind of compare the two. I was looking at these this morning, and there's very little difference, because they're going to be a very similar price, as in the 8s till 2:30s. They're going to go from 70 to 73. That would be our bullish spread.
Yeah.
We're about 10 cents out of the money, which is nice.
Yeah, it's close.
And this would be our bearish spread, right? Going $70 down to 67. Same $3, okay? But what I want to compare it to is then we jump to the 2:30s for the daily, essentially, and these are $5 spreads with the same exact price beginning. Now, what's interesting here is, right, check it out. So the 70 to 75 is the same exact price as the 70 to 73.
Look at that.
On a day like today, you could see more than $3 of movement, okay? Now that's slightly out of the money, and let's just compare and see how this lines up and if they're identical or not. And so they are. So again,
that is amazing.
You're looking at the $3 spread and the $5 spread, identical bid offers. So this is where you want to get used to things, because right away, what are we going to do? We're going to close out these $3 spreads, because they're not even worth looking at when you can
same money
give provide yourself with $5 of potential profit. So this would be your bullish spread. You're about 16 cents out of the money. You'd be buying it, and this is your bearish spread. You're going to have 16, now 18 cents of intrinsic value, and that's going to be the difference. This one's going to be about $18 more expensive, 16. So you're looking at $74 total, right? So you would need 74 cents total away from $70. It's called 75 cents. So you're going to need either $69.25 becomes your break even, or $70.75 becomes your break even, and you have until 2:30.
Pretty cool.
So you can trade these out prior, right? I mean, let's say you're looking for, let's say your bias is you think oil's going to pop.
Right.
You think maybe President Trump's going to pull out of the agreement, the market's going to react, say, oh no, oil prices are going higher. So that would be kind of your bias. Well, then what if you get some huge movement prior to the move downward? Maybe you take that position off, right? Because you're really looking for the news to pop. As in, you can trade these out. You know, this is your bearish spread currently. Right now, it's great that they're ticking by 1 penny in between the bid offer, right? I mean, talk about the ability to trade them. You know, you could buy that back, and you'd be getting $44. Well, if this spikes lower prior to that news, and we've been getting some action. I mean, we were just up at the market open at $70.30. We've moved almost 50 cents in the last hour. So that could always have some volatility even prior to the news coming out.
And you know what would be wild is that, you know, like Kevin was talking about the politics inside the oil market right now. If, in fact, he came out and says, okay, I'm going to give it another 30 days, something extended, it would shock the market. It'd be,
yeah, and I was going to bring that up, but I don't know if he can say that. That's where
he can say anything he wants, right?
Well, no, there's a May 12th deadline. That's why this is coming. So it's not like there's more to go. It's not just a regular announcement that he can say it's gonna we're gonna wait. He needs to either reaffirm or whatever.
Right. Because he reaffirmed it 6 months ago. Exactly.
There's not quite. It might be. There's not quite that ability to just freelance and say I don't like it, but we're going to give it 2 more months to see what they can do. I don't know what kind of limitations are there.
Well, if it gives it 6 more months, that oil market could get hit pretty quick.
To the downside,
Yeah,
right?
exactly.
Because that would basically, 6 months, that's saying we're not going to do anything currently. We're going to stay in the agreement for all foreseeable. That's how the market would consider it. And look at how oil is continuing to pull back. So what's nice is this trade lines up particularly well when the price is near $70, right?
Right.
Because as we've just gone down about 16 pennies since we've been looking at this, and what's happening as this happens is you're gaining intrinsic value on the bearish spread. So the bearish spread's becoming more expensive. And now you're up to $78. So you're still paying a similar amount of premium to the upside because we're somewhat there, but the intrinsic value is getting added to the bearish spread as this continues to decline. So it's ideal when you're looking for a volatility trade when it's right at the point, which would be $70, your pivot point kind of where you have upside and downside potential because you're paying no intrinsic value on either side, which is nice for your upfront investment. But still, pretty close. And
that's a lot of movement so far.
Yeah, and you got 4 hours of trading activity. And as we can see, even without the news, we're getting upward and downward moves throughout the day in crude. And 2 p.m. today, we're supposed to get it. Now, like I stated, the one variable, and there's many variables, is that you might not get the announcement by 2:30. Right. You only have a half hour. We know how press conferences work in the government, right? Yeah. And especially, I imagine that President Trump's going to want everybody to be watching, and so maybe he lets the crowd build until 2:15, because he knows everyone's tuned in at 2 o'clock. Why not make sure everybody's really tuned in at 2:15? Just things to consider.
I was actually surprised that it was even not just the oil market, just in market hours in general, because, we'll see, and nothing seems to affect this market anyway.
Sure.
But it's going to be a big announcement.
It's a guaranteed audience when it's during the market hours.
Oh
right?
yeah,
that's right, for sure.
No doubt.
Yeah.
Stay right there, folks. So Tommy and I are coming right back. Our phone number is 877-927-6648. We have the Dow Industrials down 15, Nasdaq's off 17, S&P's off 6.5. Come right back.
We're going to jump right back into oil. So it's 12:01, and look at this volatility. So if you were with us on the air during the 10 o'clock hour, we were looking at some potential volatility trades for oil in anticipation of some volatility leading up to that 2 p.m. announcement. And we have gotten some volatility and then some, and we still have 2 hours until that planned announcement. So the news coming out there is that you had first CNN saying that he is expected to announce that he will allow sanctions to go forward, but giving some time, as in that they would take a couple of months to implement. Potentially, sanctions could take months to go into effect, giving the U.S. government some time to possibly renegotiate. And then on the heels of that, you get Trump telling President Macron of France, that he will withdraw from the Iran nuclear deal this morning in a telephone call. So those are the two events, and that is where you see the first step with oil plummeting, thinking that maybe we wouldn't pull out full stop. Maybe there'd be time for a renegotiation. Oil proceeds to drop. These are 5-minute bars, $1.40 in the span of 5 minutes. And then you get the second report that no, he is going to pull out. He had told the president of France. So volatility either way, looking at that trade would have been a sweet volatility trade with $70 being our price point. But guess what? 2 hours still left to go. Until that announcement, 2.5 hours left in these daily contracts. Pretty cool nonetheless. We'll see what happens. Stay tuned, folks. Have a great day.